Good morning, this is Tim McGowan for the Finance News Network. The Dow Jones Industrial Average and the S&P 500 ended the first day of September on a high note as traders look forward to the jobs report tomorrow. The Dow cut its losses from earlier in the day, jumping nearly 0.5% in the final minutes of trading. The S&P 500 rallied 0.3% after trading lower for most of the day. Both snapped a 4-day losing streak. Meanwhile, the Nasdaq Composite fell around 0.3% to post its first 5-day losing streak since February. It still came back from deeper losses earlier in the session. This move came as the two-year US Treasury yield topped 3.5%, the highest level since November 2007, with that news weighing on rate-sensitive growth stocks. Overnight, chipmaker Nvidia shares fell 7.7% after the chipmaker said the US government is restricting some sales into China. The company said that US officials told it to stop exporting 2 top computer chips for artificial intelligence work to China, a move that could cripple Chinese firms' ability to carry out advanced work like image recognition and hamper Nvidia's business in China. Other companies that make tool or design software have received similar letters in recent weeks, informing them that their higher-end technologies that they export to China have been restricted. The restrictions are part of a Cold War between China and the United States for primacy in advanced technology. To add to this, after years of growing their Chinese operations, US tech firms are starting to relocate production, with the moves small so far. Some of those moves include Apple moving some production of AirPods to Vietnam in 2020, where it also makes watches and iPads. More iPhone production will be done there as well. Google will shift a portion of its latest Pixel phone manufacturing to Vietnam from China. Microsoft's Xbox and Amazon Fire TV devices, both of which used to be exclusively made in China, now ship from Vietnam and India. Over 2 decades, the tech industry has built up a low-cost and formidable supply chain in China, but there is now a political push to diversify this supply chain. It looks like more and more capital is going to pull manufacturing out of China to find alternatives like Vietnam and India. Geopolitics aside, it appears that COVID exposed the vulnerability of the US to the Chinese supply chain. Across the sectors overnight, markets were defensive as healthcare and utilities outperformed, while the oil price tumbled again on Thursday as new COVID-19 lockdown measures in China added to worries that high inflation and interest rate hikes are denting fuel demand. Oil fell 3.3%. Best performing sectors and industries overnight included biotech, retail, media and real estate. Worst performers included industrial metals, precious metals, semiconductors and internet services. On the currency front, one Australian dollar has weakened 0.5 cent compared to the US dollar. On commodity front, iron ore futures are pointing to a 2.9% fall. Gold prices fell below the key $1,700 level on Thursday for the first time since July. Gold lost almost 1%. Silver was down 1.2% and copper fell 3.2%. On the futures front today, the SPI futures are pointing to a 0.3% gain. This is Tim McGowan for the Finance News Network. Have a good weekend.